All right. Hello. And welcome back to another live video. All right, so now this particular live is for my teachers, my nurses, and anybody who works in the nonprofit sector. Um, because more than likely you either have or have heard about 403b retirement savings plans. Okay. And so now, while they're a little less common than 401ks as far as the retirement savings plans, 403bs are still a great tool to help you to reach your retirement goals, offering many of the same benefits as 401ks. Okay. And so it's awesome if you are a teacher or a nurse and you have access to a 403b through your employer. You also have to question and ask yourself, will it be enough to meet your retirement goals? And should you look into adding an additional product like an index universal life to make sure that you are financially secure in retirement? Because we all know that Social Security is not something that you should bank on, especially in what we have going on with the Trump administration. Okay. And so in tonight's live, I'm going to be discussing the key differences between Index Universal Life insurance and 403b retirement plans. These are two powerful tools for building long-term wealth and security. And so you're going to learn how each one works, where they shine, their tax advantages, and how you can potentially use both to create a personalized and prosperous retirement strategy. All right. And so grab your notebook and something to write with because class is in session. Okay. All right. And so if you are new to me or to the channel, my name is Katrice, and I am a licensed health and life insurance broker, paralegal, and your wealth architect. And I help women entrepreneurs and professionals to grow, protect, and secure their finances and to build a financial legacy that they can be proud of. All right. So let's go ahead and dive straight into it. Now, if you are ready to move beyond that one size fits all financial advice that is being thrown out here, there, and everywhere, then you are in the right place. Okay. So now, if you don't fully understand the various financial tools that are available to you, then you could be really sabotaging your retirement wealth growth. Okay. And so all this week, I'm going to be focusing on the most common and popular retirement products and highlighting how Index Universal Life can complement these and enhance them and your retirement wealth strategy. Okay. Because it's great that you have a 403b if you have access to it. It's amazing that you have it, but you also need to be aware of what else is available. Okay. And so now, for far too long, traditional retirement planning has given women um, it's giving women in education and nonprofit work a cookie cutter approach to retirement and just pushing a single path and just pretty much leaving you to figure out the rest. Okay. And so let me know in the comments if this is something you've heard or how it was presented to you when you were introduced to your 403b. Okay. You may have heard something like, if you just max out your 403b every year, and then in addition to your Social Security retirement, that you'll be set and you'll be good to go. Okay. Let me know in the comments if you've heard something to that effect or that variation. Okay. But now, as we all know, especially if you are a millennial or a younger Gen X, Social Security is not a source that should be relied on for your retirement. Okay. Even on the Social Security's website itself, it says that by 2037, Social Security is not even going to be paying out 100% of the benefit to all eligible recipients that are currently receiving Social Security. It's only going to be about between 70 and 80%. So you're not even going to be getting your full 100% payout that you have paid into and are eligible for. Okay. So that right there, and they're telling you this on the Social Security's website. So that right there should be alarming enough to you to say, hey, I need to figure out another course of action because I know for a fact I cannot rely on Social Security, right? And so, if you've ever wondered, is there more I should know? Is there another way to create financial peace, flexibility, and how can I, build my financial legacy and leave a financial legacy for my children and my grandchildren? Then you are asking all of the right questions. And if you're watching this live, then you are definitely on the right path because that is exactly what we talk about here on this channel. Okay. And so now a 403B can help you to build a solid foundation. Okay. But it often comes with limitations. Like, it's tax deferred. So obviously you're going to, there's taxes that you're going to have to pay in retirement. There's penalties for early withdrawals. And then there's limited access to your money. Okay. And when you think about it, I mean, it is a retirement product, right? But we all know that life be lifing, okay? Especially for women. And the financial advice that is given for women, well, the financial advice that is given generally is really more so tailored towards men and not women. And so a lot of it is very rigid and it does not have that flexibility. Um, and so, you know, if you are looking to have a little bit of flexibility before retirement to be able to access your money when something happens, if an emergency comes up, okay, a way to protect and pass on wealth, then an IUL can complement your 403B and fill in the gaps, okay? So I'm going to break down both of the products. We're going to do like a side-by-side look so that you can make decisions from a place of knowledge and clarity on how you want to fund your retirement wealth strategy. Okay. So first, let's jump into 403B. Okay. And really break it down so that you truly understand it. Okay. So a 403B, it is a tax advantage retirement savings plan, and it's offered to employees of public schools, certain nonprofits, and hospitals. Okay. So if you're an educator, if you're a nurse, if you work for a nonprofit, then chances are then you've seen this as a part of your benefits package. Okay. So teachers, university staff, librarians, nurses, employees at charitable organizations. It is specifically designed to help those in service-driven professions to build long-term financial security. Okay. So the way it works is that your contributions are taken directly from your paycheck before taxes. So it makes it an easy and convenient way to invest in retirement without having to think about it every single month, without having to budget it in. It just kind of automatically comes out. Okay. Now it does have contribution limits, and for 2025, you can contribute up to $23,000 if you're under 50. And so this is the same amount that you can with a 401k. And 403bs are really similar to 401ks. Okay. Now, if you are 50 and older, then you get to do catch-up contributions. And so that allows you to save an extra $7,500 per year. Now, some organizations offer additional catch-up contributions for employees with 15 plus years of service, but it just really depends on your organization. Okay. Now, many organizations will match a portion of what you contribute. And so this is essentially free money that is being added to your retirement savings. Now, not all employers do that. So you want to, look into your benefits, check with your HR or your benefits manager to see if your employer does employer matching. Okay. I remember when I used to work at Everest University. I did financial aid, and they did matching. I think they did like a 3% matching. Um, if your employer does that, you definitely want to take advantage of it because it's essentially free money that you're getting. Okay. Now, when it comes to the investment options, you can choose from a wide range of mutual funds and annuities, but the investment choices may be a little more limited than a 401k or an IRA. And so it's important to review your plan's options to understand the fees that are attached to it. Okay. Now, it is tax deferred growth, meaning that your money grows tax-free inside of your 403b until you withdraw it. So you don't pay any taxes on your contributions or the investment growth until retirement, okay? Until you start making withdrawals, okay? And it's also tax deferred. So that means that you are contributing the money pre-tax, which means that it also reduces your taxable income for the year. So you're getting a tax break up front. Okay. Now, when you take the money out in retirement, those distributions are taxed as ordinary income. Okay. And if you withdraw any funds before age 59 and a half, you could face a 10% early withdrawal penalty. Now, there are some exceptions to that, but for the most part, you're going to pay a 10% penalty. And it's the same rule as with the 401k. And yes, they do charge you that 10% penalty. Ask me how I know. Okay. All right. So now some pros and cons to having a 403b is the automatic and consistent savings, because the payroll deductions make investing effortlessly. So it's really a no-brainer, right? It does reduce your taxable income now, letting more of your money grow over time. The potential employer match, which increases your retirement savings. So, you're not adding any extra. The employer is kind of giving you a boost there. And then it is designed for service-minded professionals, my teachers, healthcare workers, nonprofit leaders. Okay. All right. Now, the cons to this is that it is limited investment options. So there are fewer choices than IRAs or some 401ks, which can impact the growth potential. The taxation at withdrawal, you're going to be taxed as ordinary income, and early withdrawals can be costly. And then it also has the required minimum distributions. So at age 73, whether you need the money or not, you must start taking you must start taking distributions. You must start taking withdrawals, okay? Because the government they want their cut, okay? They let you defer taxes and grow it for so long, and now it's like, okay, it's time to pay up, okay? And then there is a potential for higher fees. Some 403b plans, especially those focused on annuities, have higher administrative costs. So you want to look out for those things, okay? Now, there's going to be pros and cons to everything that you do, you know what I'm saying? No matter what. But you have to look at, do the pros outweigh the cons? And how are you going to manage the cons? Okay. All right. So now let's talk about Index Universal Life. Okay. Now, this is a tool that has been really gaining popularity since 2020, but it is often misunderstood. But it can be a true game changer when you know how to use it properly. Okay. So Index Universal Life is a type of permanent life insurance policy. So as long as you pay your premiums, then it's designed to last you your whole life. Okay. Not just a set term. But IULs do so much more than just pay a death benefit to your loved ones. Okay. They allow you to build cash value, which cash value, especially in the IUL, it is a living, breathing resource that you can access while you're still here to enjoy it. Okay. And one of the beautiful things about IULs is that even when you take withdrawals or loans, the money is still growing because it's still linked to the index. So you can take a withdrawal and still your money is still growing because it's the money that's still in the policy is still growing. So that's one of the beautiful things about it. Like that compound interest is chef's kiss. Okay. So with each premium you pay, a portion of it goes into a cash value account that can grow over time. Okay. It does grow over time. And so what is unique about Index Universal Life is that this growth is linked to the performance of a market index like the S&P 500 or the NASDAQ. Okay. But your money isn't directly invested in the market. And that's another beautiful thing of it. Okay. So you get the potential for growth without the risk of losing money when the market dips. Okay. Now, just like traditional life insurance, your beneficiaries, they will receive a tax-free payout when you pass on. And so that's money that you can leave for your loved ones, a favorite charity, or even your business, depending on how you have it, who you have as your beneficiary. Okay. Now, but unlike most insurance products, IULs offer flexibility. You can adjust your premium payments to fit the ebbs and flow of your life. So the premium payments are not set in stone and they can be adjusted. And so this is especially powerful for women because, a lot of things change where often we have kids, things happen with the kids, things happen with the home, you know what I'm saying? Or if say something happens and you get divorced and so, you're losing income, right? And so you can adjust the premium to help adjust with life. Okay. Now, the benefits of an IUL is the tax-free retirement income potential. Okay. And this is one of the most powerful features of the IUL is the ability to borrow from your cash value tax-free. Okay. So you can create a stream of retirement income that isn't taxed the way the withdrawals from a 403B or traditional IRA would be. Okay. So you can supplement your retirement income without worrying about a tax bill eating away at your savings. Okay. Now, there's also the protection from the market volatility. Okay. So when the market goes up, your cash value grows. But when the market drops, your IUL policy, it has a floor. Okay. So you won't lose cash value due to market downturns. Okay. And so this is the kind of stability that can bring you peace of mind, right? It makes you want to invest in the policy because you know that you're not going to lose anything when the market dips. Okay. Now, it also has what's called a cap. Okay. So say the cap is like it won't go above this certain amount of earnings. Okay. So say the cap on your Index Universal Life is 12%. Okay. So you'll earn up to 12% when the market goes up. Now, if the market goes beyond 12%, you're only going to gain 12%. However, If it dips lower, and it like drops really low, you're not going to lose anything. Okay. So while there is a cap on your earnings, you're also not going to lose anything. Okay. So that market protection is very, very key. It's very important. Okay. Um, Also, the legacy planning portion of it. So, Index Universal Life, they let you build and protect generational wealth. Um, and not only can you provide for your loved ones after you're gone, but you can also use the living benefits to fund your children's college education, to help a family member if they need help, or to invest in whatever you decide you want to invest it in while you're still here. So you can use the cash value for a multitude of things. There's however you want to use the money, you can use the money. There's no limit or regulation on how you can use the cash value in the policy. Okay. Now the drawbacks to an IUL is the potential fees. So they do come with various costs. So there's the policy fees, the cost of insurance, and then sometimes there can be surrender charges if you access the money too early. Okay. Because you want to let the money stay in at least, I say 7 to 10 years minimum, to allow the money to grow and take advantage of the compounding. Okay. You can't put it in today and then in a year decide that you're going to take the money out, because it doesn't work like that. Okay. It hasn't built up enough cash value. Okay. And so the fees will eat into your cash value if it's not managed properly. But not only if it's not managed properly, it also has to be structured properly. If your IUL is not structured properly from the get-go, then you're going to run into issues when you start withdrawing money from the policy. Okay. So you want to make sure that it is structured properly, that you are working with somebody who knows what they're doing. Okay. And so then IUL also, there can be pretty complex. And so they're not as simple as just a savings account or a basic term policy. So understanding how the cash value grows, how the loans work, and what your policy limits are, does take time and education. And so that's why it's very crucial that you work with an advisor who knows what they're doing, who truly understands these products. Not only do they understand the products, but they understand your financial goals so that they can help you to structure it properly so that you are putting in the amount of money that is required to fund your goals. Okay. Now, also, the cash value growth depends on the market index performance, which is subject to caps and participation rates set by the insurance company. So while you won't lose money due to a market downturn, you also won't capture all of the market's upside. So this is what I was talking about when I said that there's a cap on how much you can earn, and there's a floor so you don't lose any money. Okay, when the market has that downturn. All right, so let's get into the side-by-side comparison of both. Okay, so first we're going to look at the growth potential. Okay, so when it comes to the 403b, the investment options, it works like I said, it works like a 401k, but it's just for educators and nonprofit professionals and nurses. And so your money is directly invested into mutual funds, annuities, or other market-based vehicles. And so this gives you a wider range of investment options. And with that comes the full range of market ups and downs. Okay. And so when the market is good, your money can grow quickly. But when it's not, then you're going to experience real losses. Okay. And so if you like control, choices, and don't mind riding out volatility, then a 403 can offer a more hands-on investment opportunity. Now, with the Index Universal Life, this is market linked interest. So it's growth that is linked to the performance of the market index, but your cash value follows the market. It is not directly in the market. So you can benefit when the market rises, but you're also shielded when it drops by the floor. Okay. So, you know, your growth is capped, but the stability and protection against losses is a breath of fresh air, especially if you already have a 401k or 403b. And if when President Trump announced his wonderful tariffs and how the market took a nosedive, and people were like, "Oh my God, my 401k it just like plummeted." You won't get that with an Index Universal Life. Okay, you won't be gaining. However, it won't. You won't lose. Okay, so you're shielded from that. All right. So now, when it comes to the taxes, with an IUL, you pay your premiums with after-tax dollars. Okay, and so you've already paid money on the taxes that you are using to fund the IUL, and so as your cash value grows, you can borrow against it tax-free, no penalties, no income tax, no reporting to the IRS. Okay. Plus, your beneficiaries will receive the death benefit free from income tax. So once you are no longer here, your beneficiaries will get the death benefit tax free. They don't have to pay taxes on that. Okay. And so this structure is a powerful tool for both your living using the cash value while you're alive, and also leaving a legacy, a financial legacy for your children, starting them off on a good foot. Okay. Now, when it comes to the 403b, the contributions are pre-tax. Okay, so you haven't paid taxes on that money. So while it does give you the tax benefit of lowering your taxes now, which is a win-win, which is a win if you want to, you're needing that break for on your current taxes. When you retire and begin to withdraw, every dollar you take out is taxed. That's ordinary income. Okay. So depending upon what other retirement products you have or other sources that you are getting your money from, then you are going to have to pay taxes on that. So it's going to be taxed as ordinary income, which means your tax bracket, you could be in a higher tax bracket. Okay. And then after age 73, you are required, the required minimum distributions kick in, and you must start pulling money out, whether you need it or not. And those withdrawals will be taxed. So it's a classic pay later system. Save on taxes now, but you're going to pay the piper in retirement. Okay. Now, when it comes to the accessibility of your funds, the 403bs are restricted, and any early withdrawals, you will be penalized. Okay. So if you're taking the money out before age 59 and a half, then you are going to be penalized a 10% early withdrawal penalty, and they do penalize you. Okay. Plus, you're going to have to pay regular income taxes on the amount withdrawn. Okay. Now, there are a few exceptions for hardship or disability or separation from service. But in most cases, if you are locking your money away, in most cases, the goal is to lock your money away until retirement. Okay. And so if something happens, an emergency happens, you can't go get that money unless you are like, I just got to pay the penalty because I need the money. Okay. Now, with an IUL, it's flexible access. There are no age restrictions. And so once your cash value builds up, you can take a loan out at any age for any reason. There are no penalties. There are no waiting until you're 59 and a half. And so, if something happens, an emergency happens and you need the money, or you want to go start a business, or you want to purchase a car, or you want to pay for college for your kids, or use it as a source of supplemental retirement income. You can use it for whatever. Um, and if you're taking loans, then you are required to pay the money back. Well, no, you're not required. It's expected that you pay the money back. However, if you don't pay it back, then it will be taken from the death benefit. Okay. Now, if you are taking out loan, if you are withdrawing money, you are withdrawing the money. You can withdraw up to the amount of premium that you have paid into the policy. So if you withdraw over that, then that's when it will be taxed. So you have to be very careful when it comes to withdrawals to make sure that you don't withdraw too much. Okay. All right. So let me know in the comments if you have any questions regarding the differences between the two. And so now we're going to get into when you would choose one over the other, or would you choose one over the other. Okay. So if you have if you're in your early career, if you're just now getting started, you know you just graduate school, so you just now become a teacher or a first year nurse, or and you have access to a 403b, and they have the matching. Okay, so your employer, the employer matching, then you are definitely going to want to take advantage of the 403b. Okay. Especially with the matching contributions, you don't want to leave that money on the table. Okay. um, and so early in your career, your main focus should be on building a strong foundation. You want to take advantage of that employer match, automate your contributions so you'll have it come directly out of your paycheck, and then let time and compounding do the heavy lifting. Okay. This will be your base. Okay. And help you to get a steady, reliable, and great step towards security. Okay. Now, after you've gotten yourself established and you have this, going for you, you know, and you're older, your dreams, your responsibilities, and your financial needs are going to evolve. Okay. You'll probably have kids, you'll get married, the house and all of the things. And so you're going to reach a point in life where you're going to need more than what a 403b can offer. Okay. And so at that point, then that's when layering in an index universal life policy can really be the game changer. Now, especially when you first get started, you may not have the funds to properly fund a index universal life policy, which is why you want to also look into getting the 403b to begin with. And then as your income grows, okay, then you have the funds to be able to get the index universal life policy. However, when you're first starting out, you want to make sure that you at least have term insurance. Okay. So even if you don't have the income to put towards the index universal life, you have your 403b. You also want to make sure that you get term insurance. Okay. You want to look at getting a policy anywhere between 20 and 30 years. Okay. I don't recommend 10 or 15 years because once that term is over, unless you have the rider where you can convert it into permanent insurance, then you're going to have to go through all the health questions and all of that again. And you're going to be older. Your health may not be as great. And so your premium is going to be higher. So you want to look into getting a 20 or 30-year term in addition to having the 403b. And then as your income grows, then you can look into adding an index universal life policy. Okay. All right. So as you approach your retirement and beyond, okay, your focus is going to start turning towards legacy. Okay. So, like right now, if you are, say, in your 40s or your 50s, you're thinking about, okay, I know, I need to start building for when I'm not here. Okay. You're thinking about, your legacy and how you can, what you're going to leave for your children and your grandchildren. Okay. And so this is where the tax-free death benefit of an IUL becomes powerful. So I say if you are, now in your 40s or even in your 50s, now would be the time for you to look into getting an index universal life to see if, you are eligible to get it. Now it is whole life insurance, so it is underwritten. So it does take your health into account. But if you're healthy, and even if you're not, you don't have to be like super healthy. Having high blood pressure is not going to automatically kick you out of getting an index universal life. Okay. But you definitely want to look into it because now you'll have that 10 to 15 years to where you can just let the money sit and compound, and that compounding interest, when I tell you, that is the real driver, the real key behind you having the policy. That is what really is the game changer when it comes to index universal life. Okay. All right. So before I close, I just want you to remember that you don't have to choose between the two. And a lot of the financial advice that is given is you have to choose between the two, or they tell you that this policy, this product isn't as great as that product, and you should only do this and you should only do that. And there is no onlys. You need to be well versed in all of the financial products that are available for you to purchase, because you don't know what is going to be great for you. Just because Dave Ramsey says you should only get term, it doesn't mean you should only get term and invest the rest in stocks. That may not be the route that you want to take. And there's so many other products that are available. You have ETFs, you have bonds, you have mutual funds, you have index universal life, you have whole life insurance, you have, real estate. There's just so many products. There's annuities. There's a multitude of things. There's cryptocurrency that you can get involved in. And so just following one person's standard cookie cutter advice, it doesn't work for everybody. Okay. Start with what is available and makes sense for you today. And then as your life expands, so can your strategy, because you have to remember that building wealth is a strategy. It's not linear. It involves a multitude of things. And so you need to craft a financial plan that grows, adapts, and aligns with who you are becoming, and not only staying with where you started. Okay. All right, so that's what I have for you today. And so if you have made it this far, thank you so much for watching. My goal is to always to provide practical, actionable financial advice to help you to take control of your finances and your future. And if you would like to book a consultation with me to see if you qualify for an Index Universal Life, if you need life insurance, or even if you need health insurance, then you can definitely do so. You can book a consultation with me using the link in the description of this video. Now, if this video did help you, give it a thumbs up and share it out with your business bestie or your water cooler homegirl, who may also need this info. And subscribe if you like the content that I provide on this channel. All right. And so in the comments below, let me know if you have a 403B. Let me know if you have one. And if if your employer offers employee matching, are you taking advantage of that? Okay. All right. And so I also have a toolkit. I have a free retirement guide. It walks you through, and it's not just a retirement checklist. It also comes with a savings guide. Is it the retire? No, that's the toolkit. That's the toolkit. My bad. So I have the retirement checklist. Is a a checklist to show you where each stage of the retirement planning process to help you get organized and start your retirement planning. And also my money toolkit. And in the toolkit, I have a savings planner, a Finance 101 financial literacy ebook, and the money or the spreadsheet to help you get organized with your finances if you are needing any help with getting organized in your finances. So if you would like to access to that, you can just comment toolkit and I will reply with the link. Also, if you want to get your hands on the retirement guide, just reply guide and the checklist, or reply checklist guide, either one, and I'll get you the link for those. Okay. All right. And so remember, the way to secure your financial future is to protect it now, because no one is coming to save you tomorrow. All right. Have a good one.